big question, where is this bottom coming in for Bitcoin? I've got a data heavy video for you guys today, plus a look at some of the strong altcoins which are putting in higher lows while Bitcoin struggles. Now we've got to get through the macro update as well. What else would you expect? It's your home of macro cycle analysis, covering Bitcoin, stocks, crypto, and this real estate cycle. Got it all in there. Thanks again for your support with the no-nonsense titles and thumbnails. Much appreciated. Smashing up the likes, hitting that 4,000 level yet again. Views are a little down, but I suspect that's because of the market being down. And as we know, many people leave and don't come back until it gets exciting again. Nonetheless, you know the deal. Links in the video description. I'll discuss that later. Let's kick it off with the macro update here. The traditional markets, this is the predictions from the market. This is your interest rates at the top here, and we've started to see a shift to the left again. So many are anticipating a cut coming up sooner rather than later, and I suspect that with how easily it was to shift to the left, I don't think we've got these cuts coming up. So that was my theory at the beginning of the year. It says the 15th of January here. I was not expecting all of these rate cuts. If you can just see in the blue, that suggests that there was going to be rate cuts every single meeting, that we were going to get down to like 3.75%. No way in hell that's going to happen with asset prices increasing, real estate increasing, you name it, everything is going up. They're not cutting interest rates. They have to increase the interest rates to curb all of that inflation and prices rising. Plenty to be discussed on that, but we've talked about it in many, many videos, which is why I suggest subscribing to the channel so I don't have to go through it in every single video. Let's move on to the stock markets. We've seen a slight bounce here at the 50% level. So there was a rejection on Monday this week, and now we've seen a bounce off the shorter term 50%. So overall, this still seems like the grind that we're anticipating for the election year, the seasonal pattern here in this sort of, second quarter of the year, where essentially we're not really putting in any new prices and we're not really going to break down into some sort of collapse, which I guess people are still anticipating, but it's essentially a grind. We've gone up really strong, we've had a pullback, and now we need to find our feet again. Just flushing out some of the fear, I guess, are taking profits from that huge run up of the last 5 months, which tends to lead to more upside. S&P 500 5-month winning streak ends, and it has to end. To get the reading, you need to go through the 5 months up and then the month correction. So you can see here in April, we had that correction. The swing chart has turned. It's been a red month. It's a down month. The 5 green months has now ended. But what does that mean with the data? S&P 500 index closed higher every month from November. A 5-month winning streak tends to be bullish for stocks in the future, especially if the 5-month gain is 25% or more. And I believe they were looking at that being the 25%. Yeah, so lows to high, 28, possibly measuring it from closes. Nonetheless, it has been a 25% here, but with April closing with a monthly loss, the latest winning streak is over. So what does that look like when it comes to the data? These are all the data points going back to the 1920s. Yes, there is an upwards bias for the stock market, which is why I think it's really ridiculous to keep calling a collapse every single year, because you're essentially right 1 out of 10 years. And that's no way to be trading in the markets. It's absolutely ridiculous. Anyway, looking at all these data points, 3 months from now, 6 months from now, 12 months from now, you end up with 70 to 90% hit rate of a higher price for the S&P 500. So that's all going to be good news for the rest of the markets. You've got the S&P here. The NASDAQ is also doing similar things. You've got a huge winning streak, a pullback, potential grind here. We've looked at the weekly signal as well. So I know I'm bringing in just another quick signal here. 3 red. We look to a rally and then another test to the downside. So that's looking at the, I guess, medium term. When you try and layer it in with the longer term here, we've got that correction. And 3, 6, 12 months from now, probably going to see higher prices than where we are. That's just looking at the data. Of course, we can't guarantee anything because no one knows what's going to happen on the black side of the chart. We're just looking at the probabilities and suggesting that, well, it seems like from history, we're probably going to see higher prices rather than lower prices. The US dollar, as it has failed again on the daily chart here, it's finally broken down from these lows. Early days, still above the 50% here at 105.2. If it's able to find support here, maybe it goes on one more attempt to the upside. To the upside, you've still got the resistance at 107. And the reason we're looking at the US dollar, typically when this is weak, you'll see more strength for the assets. And of course, our main interest here is Bitcoin and cryptocurrencies. So US dollar is playing a pivotal role here for Bitcoin and cryptos. For now, it's on the decline for the last couple of days. That leads me over to Bitcoin and what happened yesterday. Well, we finally got a bounce, but of course, you tend to see bounces after pretty significant moves to the downside. So I'm not taking any prizes for that one there. The 50% level above, roughly 62K, there it is, 61,900 to be exact. And my white line is really the area that I'm looking out for BTC to get back above, to essentially consolidate and say to the market there's going to be less time underneath the all-time high than if it was to fail here and then continue down, which will then lead me in a moment to the monthly data. So I want to have a look at this monthly data and those lows coming in. So just for your short term, pretty significant resistance around $60,000 to $62,000. If you can get back above that, I'd say that invalidates any more downside, at least for the short term. And if it can hold above those levels, then it's looking much better to be able to break to higher prices. So for me, keeping $62,500 on the screen is the important level right now. So in terms of the narratives, this one here, we've seen the largest net outflows of ETFs in history. So the main thing I'm bringing up here, of course, is always the damn narratives. The narrative at the peak was that we're probably going to see $100,000 before the halving. Why? Well, the supply is going to be cut in half. What does that matter? Well, there's so many people buying ETFs. There's all BlackRock and Fidelity and you name it. ARK is buying Bitcoin. They'll never let the price go down. There's the same bullshit that we heard in the last cycle where they were saying, well, the price will never go down because Michael Saylor's average price was $30,000. They'll never let it go below that. It's just nonsense every time. And now a lot of those people who were talking about that at the peaks, which I see in the comments section, where are they? They disappear. Every single time they're here as if they are experts. And then as soon as the opposite happens, maybe it takes a month. In this case, it took 6 weeks. They disappear. And it happens every single time. I guarantee, as I guaranteed last time, this is something I can't guarantee, we will see it again. There will be some sort of narrative that tries to disguise the fact that there's going to be another top. The same as there is at the bottoms. There's always some narrative, like there was November 22. There was the FTX collapse. Bitcoin collapsed into this low, and it was essentially said that it was not going to come back. FTX collapsed it. It was done. DeFi collapse, Luna collapse. And then we had the banking crisis here as well. So it's the same thing at every single major turn, which allows you to see a little bit clearer the major turns themselves, even though they can take a fair bit of time. And yeah, that was early March into mid-March where we had this peak. It just didn't feel and seem like, when it comes to the data itself, and of course there's the feeling with the market sentiment, you can't get away from that, you're human after all, that it's probably not the greatest time to be getting in when everyone else thinks it's the greatest time to be getting in. Now, we are down 24% from the top. These are the sort of things that I'm starting to hear. You know, it's over. The top could be in. Maybe it's a left translated cycle. Inflation's rising, which some people see as a bearish narrative and some people see as a bullish narrative. You know, if inflation rises, then asset prices are going to go up, or if inflation rises, no one can afford anything, so everyone's going to have to sell everything. Stock markets are going to collapse. I've heard that many, many times now because this has been the biggest pullback, and yeah, we're probably going to hear it even more. And the old, you know, you just wait. Essentially, I guess I'm saying you just wait, and it takes time. But in terms of a risk reward for a trade, it did not seem like a great time in early March, even in late February. So take it for what you will. Use it in your analysis. Don't use it. Up to you. Essentially, we've looked at the short term. This is the narrative stuff that I just really want to warn people about, especially when it's not so hot at the moment. Because in the heat of the moment, it's very easy to forget about what happened last time. There'll be a different narrative. You can bet your bottom dollar. So the narrative is something that we'll definitely come back to. For now, let's get on with the monthly data. Now, this is the new TIA indicators suite. It is coming out, still got a little bit of time. We're still building it in the background. There's plenty of predictive tables that are also coming out on this, but if you do want to be notified when it's ready, I suggest subscribing to the free weekly report. Link is in the top of the video description. And when that's out, we'll email everyone to let them know about the new TIA indicator suite. Now, what I'm using this for is the monthly returns, and it's going to look a little, this is great to see it in terms of colors and just a quick glance, but I like to look at it on the chart as well. So we've got months in a row here. We had 6 green months in a row, and then it was broken by that first red month in April, which was essentially down 15% for the month. We're into May now, potentially 2 red months. We're only 2 days in, so maybe not, but I want to see what happens after 6 green months or more in a row. What typically happens in those coming months, in those following months. So we got that to look at. This was the data we looked at to identify the possibility of this being a peak in March, which has now been confirmed. March is the peak, no more question mark at the end of this. That is a turn. Monthly swing has now turned down. And because April was an inside month on some charts and on others it wasn't, essentially we're now 2 months down because May has broken the low of April. Even if May closes up, as long as it doesn't close higher than April, it would still be a down month because it has a lower high and a lower low. Sorry, if it didn't go higher than April's high. More on that later. So that means this data can now change, and I'll have to update this later. We have 6 months or more. I think that's in the 9. So we'll change that. And then in terms of 5 months or more, 5 months in a row of more per cycle, so basically 5 month swings, how many of those do we have per cycle? Now, we definitely have 1 for this cycle, and the cycle's still ongoing, so I'm going to leave the asterisk there so we can continue to update that. So that's these swings here that helped us with this top coming in, because a lot still thought, oh, we could still go up to 100, whatever, $1,000. Didn't happen. Okay, so what I've got next is the low. Here are these monthly turns here. May's, June, September's. You can see I've just pinpointed basically all of the monthly swing lows using the TIA Gann swing indicator, which is also part of the TIA indicator suite coming up. Now, the point of this is to figure out where the next low might come in. So I've got my data here, and I've got my monthly swing bottoms here. How many swing bottoms have we seen per month? January, February, March, April, May, June, July. And as you can see, I always like that. There's my name, Jason. Essentially, I don't know, dad joke. The data shows pretty much evenly spread across the board, except for May and June, which is a bit of a pain in the ass because we're in May and next month will be June. And the pain in the ass to that is when we look at 6 months or more, 6 or more months in a swing, which is what we had to the upside here. March was the end. We have 5 data points, which are the red arrows. You can see 1, 2, 3, 4. This is our 5th one. No, there's another one here. Sorry, there's the 5. And we're into our 6th one, so we can't use the 6th one yet because it has not been completed. How many months correction has there been? Not green months or red months, just how many months in that swing. Okay, so when we look at this one, and this one, there's been 2 months down. So if I take that away, you can see 2 months. Even though there are 3 red months, there's 2 months in that swing to the downside of lower highs, lower lows. So now you understand that. Let's move on. You've got 6 months in this one. You've got 1 month here. You've got 2 months here. And you've got another 3 months here. Even though that one was green, there's 2 red months. And then where does that go? 3 months low. So you had lower highs, lower lows for 3 months. So shorter than 1 month. So how long is this going to take? Could it be shorter than 1 month? Well, not now because we've got 2 months down. But the data had showed that it was only going to be a 20% chance that it was going to be 1 month or less, which means there's an 80% chance there's going to be longer than 1 month. Okay, well, there you go. It's happened. We got May, 2 months down. It's working towards the probabilities yet again. It wasn't going to be 1 month down. It's now into the 2 months. So what else can we use from this? I want to have a look at red and green months within those swings. You've got 3 red months here, 3 red months there. Then there was a green month. And then from this one, well, the market ran up from there for that last move. So you got 3 in this. I'll come back to this in just a sec. This move here has had 2 red months, and then it turned. In this one here was just 1, basically within 1, so basically a 0 because it didn't even complete a whole month. This one you had 2 and then a green, and that was it. So maybe this is it. Maybe this is the last month. Typically, you've only really seen 2, except for this one here. That one there was the big move up and then the big pullback. Oh, and this one here, but that was almost an equal month at the top and 2 red months down. So that hasn't given us too much to work with either because we are into that second month. So I guess you could look at it like, well, this could be the low, although there's never been a low in May, a monthly swing low that is. Why not start now and then it doesn't happen in June? There's just more probability of it happening in June. So maybe May isn't the final swing. We run up, we come back down, and then June has the final low. We don't know yet. We don't know yet. But the main thing that I want to look at is the grind sideways. So in these last 2 grinds here, these basically trading ranges of 2016, you had 5 months across. But I'm using this as a potential turning point. I did not count it in the data because it doesn't technically meet the reading of a swing, but that was the biggest correction into January, and it was a red month. And then basically you had a smaller trading range, and then it climbed out of that. So 5 months underneath the top. So that would be 5 months underneath the March top. 2 months down, and essentially 30 to 40% correction. So we've almost met all of those readings here, where we're almost at that 2 months down completed. We're at 23.5%, so not far to go to get to the 30%. And if that was to be the low and then grind out for the next few months, well, 5 months from March is roughly about August, where you might get that move out into a new fresh high, which would be sometime late summer for the northern hemisphere. What happened in the next one? 2 months down, again, roughly about 5 months until it broke out to the new all-time high. And, the market ran on from there to finish off that particular cycle. I'm kind of liking the possibility of anywhere around here. May, June, Q2 potential for that low, but I don't think from just looking at the previous history that we're just going to shoot up to a new fresh high. Things can change. Strength could come straight back into that market. That's absolutely okay. I'm just looking at the data for now, and I will change my analysis as more data comes through. We have to do that. We can't essentially just sit here and base it all off this and say, well, it's going to be 2 months down. It's going to go sideways for exactly 5 months, and then it's going to break out. Remember, nothing is exact. It just rhymes. So we're just looking at this to give us the next stage of that rhyme. And so far, that is telling us Q2 potential for the low, and then Q3 potential to break out of this sideways grind. So I'm going to come back to this data in future videos, but this is essentially the recap, the mini lesson of all of the data that we have here. So if we talk about it in future videos, rather than me go through another 10-minute explanation, this is what we are referring to, all of these points here, which now leads me to altcoins. That's another little reminder there. Thanks to the iMovie here. Hit that like button. 4,000. Let's do it. Altcoins. We've seen this low. Talked about it in yesterday's video. A reminder here, we're looking at 400 billion as that support point for altcoins. You can see the nice move up, the nice correction. Took 4 weeks. And another couple of weeks. We still haven't put in a lower low yet. Maybe we don't. And we continue with the higher low, which is putting more strength into some altcoins. I've got the crowd favorite here, Solana, many red weeks down, and so far has put in just a slightly lower low and pushed a little higher. Now, if you were to see this close above that sort of $138, $140 level, that's going to start to put a little bit more strength into this altcoin because it is putting in a higher low. Provided it doesn't break down from these lows now, you've got the 50% at 109 and those lows roughly around 115, 120, that is going to be a pretty strong base. If it started to break down from that, throw this thing into the neutrals, which could potentially fall into the weak. That would be the weak point underneath 80 bucks. Now, if it remained above here, that's going to be into one of the strong altcoins, which I guess I'd mentioned back in April, the look of the higher lows beginning to form. If this double bottom is to hold, you'd want to see it back above 140 and consolidate above 140 bucks. That's going to show that there is some strength in the background here. It is throwing up higher lows. And if you look at it against its BTC value, there is a nice higher low there against BTC. It's a little way off the 50% here at 257,000 Satoshis, but nonetheless, nice higher lows forming across the board for some of these altcoins while Bitcoin continues to struggle. So keep that on your charts. Watch how these markets show strength against their BTC values, and that's going to set you up for some pretty good altcoins in this next altcoin season, wherever that may be, which potentially comes in the second half of 2024. Should Bitcoin and cryptos play ball similarly, not exactly, but similarly to what they had done in the past. Like, subscribe. That is the macro look at the monthly swings. I think there is a fair bit of waiting here for quarter 2, 2024. Make sure I'm getting that right. For some sort of low to come in here for Bitcoin. And in terms of the prices, we've looked at those when it comes to, say, 56K is a reasonable level. And then to the downside, those low 50s. We'll go through that in other videos. This one is way long enough. I try to do it short. There was a lot to cover. So apologies, but appreciate your support. Thanks again, guys. I'll see you at the next video. Until then, take care and peace out.